All right, guys, back to work. Boy, a wild session comes to an end. Markets just sold off this morning after an incredibly bullish CPI report. Now, I know things are a bit confusing right now, but don't you worry. These charts look beautiful for tomorrow, and I'm going to give you guys an easy roadmap to make some money on PPI Friday. I have a number of good trades I'm tracking for tomorrow. Now, before we jump in to my favorite trades for tomorrow, if you guys enjoy these videos, make sure you subscribe, hit that like button for me, let me know in the comment section below, and as always, share this video with some trading buddies out there. Enough of the intro though, right? Let's get this party going and go find some winning trades on finally Friday session. Now, charts are all ready to go. As you can see, NASDAQ, triple Qs are all ready. The E-mini and the SPY is ready. I have two very simple clues on these charts right now that are telling us where the winning trades are for Friday morning. One of those important clues is right here on these 60-minute higher time frame charts. We are bullish overall on the S&P SPY, bullish overall on the NASDAQ and the triple Qs, but we have this very strong run down as markets. Well, this is why they say, buy the rumor, sell the news. Now, anytime I have an overall bull market with a strong shot down, overall bull market, strong shot down, it's important to remember anytime we see a strong move lower, the sellers in this case are going to try to pop this up and retest that low before we make that run back up to retest the high. So bullish market overall. We're definitely not a bear market yet, but we have that strong bear move down. Expect this to want to pull back, retest that low, and then that move back up to resume that bullish trend overall. That is one very, very important clue for tomorrow. Now, knowing that, what that doesn't tell me is the entry tactics, right? Because if we play our cards right tomorrow, we can sell on that pullback and buy on that retest. Now, entry timing is better on tick charts, faster time frames. We're going to grab the tick charts here in just a few moments. So before we do that though, let's check our schedule for tomorrow, because tomorrow is a pretty busy Friday. There are three things on my radar for tomorrow. First, of course, is that PPI number coming out at 8:30 Eastern time. We are expecting that to be another bullish signal that the fight against inflation is at least getting better under control right now. That definitely is the biggest news of the session, and it may be a very significant market catalyst like the CPI was this morning. The second thing on my radar for tomorrow is that consumer sentiment number at 10 o'clock Eastern time. This may not be a red star news event, but remember, anytime we have numbers at 10 o'clock Eastern time, Friday mornings, we tend to get some good reactions. I would try to make sure you're at your desk tomorrow between 9:45 and 10:45 at least, because that consumer sentiment number might be a good catalyst for us after that PPI number comes out and moves these markets tomorrow morning. And the final thing is tomorrow is a Friday, and Fridays are not like your typical days of the week. I have what's called the Friday mindset. You see, markets, they get a bit illiquid and they like to run on a Friday afternoon. We traders also, we are not at our best on Friday afternoon. So my mindset on a Friday morning is to get into trades early when I'm at my best and the markets are at their best. I'll take some profit quickly, remove risk early, but promise me, on a Friday morning, late morning, early afternoon, leave a runner, leave a runner. Markets love to run into the close on Friday. So three things on my radar for tomorrow. The big news is that PPI, the consumer sentiment at 10 o'clock Eastern time. And again, Friday mindset says get in early, take risk off quickly, get some profit targets hit quickly, but promise me, leave a runner. 3 out of 5 Fridays make these big runs on Friday afternoons. You can make your entire week on a Friday afternoon if you leave a well-positioned runner. That's a schedule for tomorrow. Now back to our charts though, because we got some winning trades to go find on Friday morning. We talked about how the 60-minute is bullish with a big move down, expecting that retest and that run back up. That was one very important clue here on the higher time frame. But again, the higher time frame is great for the big picture, but it's not going to help us time the entries. Let's use some tick charts now to time the perfect entry. Now, tick charts, 7,000 tick chart, upper left-hand corner. And if you're watching for the first time right now, this is the 21 EMA. It is pretty much the only indicator we use to find lots of winning trades in our trade room every morning at the opening bell. There's one very big clue here on this tick chart. We have a strong move down into a trading range. Now think about how this will play out. We know that ranges are magnets and they love to rotate back and forth, right? That's how ranges work. So knowing that, we have an overall bull market overall. I will be looking for bear traps to buy below that range and looking for bull traps to sell up above that range. The name of the game tomorrow is trading that reversals, range reversals back and forth, looking for bull traps off the high and bear traps off the low. Now, my favorite trade for tomorrow is definitely going to be bear traps below that trading range. Again, because we're still an overall bull market and that range above us will be a magnet. I have 3 different types of bear traps I'm watching for tomorrow. We're going to cover that a bit later on in the video. But for now, though, let's go and move higher here and the bull traps above the high. Now, when I say bull traps off the high here, there are 3 types of bull traps I'm looking for tomorrow. One is kind of a straight classic bull trap. Get up. We know that range below us is the magnet. We know we're going to probably get another leg lower to retest that low. I would love to run this thing up, get some rookie buyers chasing after it, let them try once, let them try twice, and get a classic bull trap pattern going lower. It's a lower low in price and move right above that high, a strong red candle closing firmly below that 21 EMA, and a run back down to retest the low. Now remember, ranges love to rotate, so the amount above the range, project that down below the range, and that will give you easy targets. Again, tomorrow's a Friday, so hold those runners into the close on Friday morning. That's one variation of a bull trap. Another variation of a bull trap is a double top retest. For example, a lot of times we'll go up, we'll trap these buyers in with a bull trap, we'll run back down to that range. Ranges oftentimes will break out pullback, right, off of those trading ranges. We'll run right back up to retest the high. Anybody who buys that breakout pullback will take some profit off at that high, and then we look for what's called a failure into trap combination. Now watch closely here. A failure pattern is like a bull trap pattern, but it's a little bit more aggressive. It's 1 try for the buyers, 2 try for the buyers, then we know we have all their stops are sitting right there, and we can sell into those stop losses as the market rotates back down into that trading range. Now keep an eye out for a bull trap on the way going lower. It's a lower low in price and a move right above that high. Again, in our trade room, in our free video classes, we call these failure patterns into bull trap patterns. Again, it's a 2 try for the buyers, trapping those buyers above that trading range into resistance, sell into those stops, and as we go lower, I want that lower low in price. I want that trap right above that high. These are oftentimes one of my favorite trades here. We trade that range rotation. Now, a third variation of a bull trap off that high is a V-top reversal. As mentioned earlier, I would love to get up and trap these buyers in and sell back down again, right? That will be my favorite variation of a bull trap. But sometimes, though, there are so many bears up here, sometimes we run up and it gets whacked right back down into that trading range. These are pretty easy if you know how to trade them. If we V-top off that high, we'll usually start to grind going lower. That grinder is your signal. Watch closely. Mark that trend line off that low, bring it right up around that high. Now, look left, find some prior swings, and these are usually where the money is made. Again, another variation of a bull trap. Now, this one could be an official trap pattern like here. It could also be a failure pattern. Oftentimes we'll get above the moving average. It could be a failure, buyers come in, buy off the 21 EMA for a failure pattern back down. So really any of the entry patterns we talk about, we teach in the free video course, you can easily apply on that V-top reversal. Now, let's slow down for a second because I know most of you guys and gals watching right now, you know why we love traps. You know how we use bull traps and double top reversals and V top reversals. I know a lot of you guys make money with these every day. But if you're watching for the first time right now, this might be a brand new language for you. But don't you worry. I teach all these entry patterns. I teach the entire strategy. I have hundreds of examples of bull traps, V top reversals, double top retest. I cover everything in a lot more detail in our free video classes. I'll put a link up top there for you. Don't you worry. Upper right-hand corner, hit that link that popped up and take that free video course because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room so we always know where the best winning trades are going to be every day. More importantly though, I want to help you start making money on your own. I'll teach you 4 my favorite entry patterns, learn traps, failures, strength trades, pullback combinations. The entire roadmap is covered in that link up top there. Hit that link, take that free course. Guys, the markets are way too good right now not to be making consistent money each day. If you're still missing the best entries, taking too many losses, hit link up top there, take that free course. Perfect for anyone who's serious about making money in these wild markets these days. And don't forget too, I'm gonna put all the important links tonight in the description of the YouTube video. I'll put our free class links down there. Start there first, start making money on your own with a free video course. We trade together every day in our trade room, 8 o'clock Eastern time. I'll put all that information down there as well. And also too, I post a lot of updates on Twitter or X throughout the day. If you're on Twitter, X, give me a follow. Details again, description of that YouTube video. But again, take that free video course first because that will give you the roadmap. And these videos make a whole lot more sense once you guys know the entire roadmap we teach in that short video series. So now we know how to get up and trade some bull traps, right, off of that high. There's one more thing I want to talk about though before we talk about buying off that low, because again, that's probably where the best money is made. We're going to cover that in just a moment. But first though, how would we know? How would we know if a market runs up? How would we know to sell this or to buy it, right? Because again, we're an overall bull market, and there's definitely a chance here we get this thing to squeeze right back up and retest those highs. I don't think anybody would be surprised if tomorrow's PPI number or that consumer sentiment number, right? I wouldn't be surprised at all if this thing rips right back higher. So how do you know if we go higher? How do you know to sell it or to buy it? There's one very easy giveaway. It's called the pop and grind, the pop and grind. No, it's my favorite dance move. It's my favorite chart pattern. If we pop up and we start grinding away from that moving average, that is your giveaway. If it pops up and grinds away, watch closely. I'm gonna mark a trend line off that high. I'm gonna bring it down off that low. I'm gonna look left, find some prior swings, right? Get underneath these prior swings. And this is where the magic is. I want that first test off the low of that channel. This could be a bear trap pattern. We're showing you here. Bear traps live below prior swings. This could be a failure pattern below that 21 EMA. It could be a pullback combination. It could be a trap combination. Again, this will all make a lot more sense once you guys dig in to that free video course I mentioned linked up there in the upper right-hand corner there. But again, we know that if we go up and we pull back to that moving average and buyers try once, buyers try twice, lower low in price, trap high above that high, that is a bull trap to be sold. Goes up, V tops, grinds back down, that is a bull trap to be sold back down. But if it pops up and begins to separate, the key is the separation. That's the key. If it separates and doesn't pull back to that moving average and begins to grind going higher, this is why the 21 EMA is so valuable. Draw that trend line, mark that channel, find those swings, and don't miss that first test. And again, if we can get that entry off that low, any of these trades for tomorrow, leave that runner, leave that runner. We know where the market wants to go. It wants to go back into that range we got this morning around that CPI report. So that is how we know when to buy a pullback or when to sell a bull trap off of that high. Now let's talk about the good stuff. Now let's talk about the move going lower, because this is the wet dream for the buyers coming tomorrow. Now, how about the NASDAQ here? And NASDAQ's getting lonely. NASDAQ got crushed here today. My goodness. A good example, though, of why we don't pick the bottoms. We mentioned this last night. We don't pick those bottoms. We wait for the proper signal. We never got a good signal this morning in the trade room. Now, most important thing right now is, again, we're overall bullish, strong run down. We have to respect that momentum, anticipate that retest of that low before that run back up. Make no mistake, this is not a bear market yet. How would we know? When would we know it's a bear market? They're going to pull back to that 21 EMA, hold that pullback, and jump going lower. Once they hold that pullback and jump going lower, okay, now you've got my attention. Now this is a bear market. This is nothing new. We've had this very big move up the last couple days. It should come to no surprise right now. We get that rug pull. Again, this is why they say, buy the rumor, sell the news, right? Buy the rumor, sell the news. Now, let's go into the tick chart, though. Tick chart is most important. Again, we're not going to trade for time chart tomorrow morning in our trade room. On this tick chart, same basic idea, right? Strong run down into that trading range. The game plan is literally the exact same thing here on the NASDAQ around those highs, right? So same basic game plan on the NQ. I want to go up, trap those buyers in with a kind of classic technical bull trap. Look for that double top and that retest back down again. And again, that V top, those three types of bull traps I mentioned earlier over on the S&P and the SPY chart. Now let's talk about the move going lower. This range, remember, this range is a magnet. It's going to want to rotate back and forth. We look for bull traps off the high and bear traps off of that low. Our biggest problem right now is if we go lower, it's a very bearish market right now in the short term. It's important that we understand we can be long-term bullish on the 60-minute, but very short-term bearish here on this 4,000 tick chart. You see linked up top there in the upper right-hand corner. So I want to be a buyer down here. But remember, like we saw today, right, we can't pick the bottoms on this. So don't pick the bottom on this. Let's look for a bear trap off that low. Now, what does a bear trap look like? Well, think about this. This is a horrible place to be selling, right? I know we're bearish in the short term right now, but I don't want to sell low after a big move down like this. So let's trap some rookies in. Trap those bears in once. Let them try twice. Now why twice? Because I want their stops to be sitting right there. If you're caught short and you get stopped out, what happens? It squeezes those stops, the market runs higher from there, right? So I want to trap in those bears, and most importantly, because we're so short-term bearish right now, I want to get underneath that low, nice strong green candle closing above that moving average. That is a classic or technical bear trap pattern. I have probably 100 or so examples of that inside that free video course. So if you haven't done so already yet, hit the link up top there, grab the link up top there, take that free video course. You'll learn more about this and see more examples of technical bear traps there. Now, remember mentioned earlier, a lot of times we'll see this market run lower. We'll get these bear traps down here, a technical bear trap. We'll run back up into that range. Remember, markets or range breakouts, they love to break out pullback. They love to break out pullback. So oftentimes we'll get a nice, easy winning trade on that bear trap reversal. But for whatever reason, the bears come in, they hold the underbelly of that range, and they whack it right back down to retest the low. This is not a full-blown reversal, at least not yet. At this point now, anybody who sells that breakout pullback, they're taking their profit now at that low. Let's now look for that same failure into trap combination I mentioned earlier on the S&P. Now again, what's a failure? A failure is a lot like a trap pattern, but it's more aggressive. I can be more aggressive in this situation because now we've retested that low. So bears try once, bears try twice. Again, why twice? Because I want those stops to get triggered going higher. Squeeze those stops, get that momentum turning back up in the opposite direction. And then again, don't forget, the trick to this is you want to get that pop up, that separation away from the moving average, that higher high in price, higher high, and get that. Again, this would be a bear trap pattern coming in off of that low. Makes sense, right? So again, as we go lower, the first move going lower, because we're so bearish right now in the short term, I need to be a bit more cautious, right? And use a technical bear trap pattern to buy back up again. But if I can get that double bottom retest. See, again, anybody who sells right here, they're taking their profit right here. Sellers become buyers at that low. These are rookies selling down here. Tight stops, small accounts, can't defend themselves. Trap those bears in, and again, squeeze those stops. That's a failure pattern. We teach that in the free video course. And again, failure into trap combination. That bear trap combination, the secret of this is you want that separation off the moving average, right? Separate away from that moving average. That little pullback right there needs to be off that 21 EMA for the best, almost guaranteed winners on that run going higher here. Failure into trap combination. Now, the final one here is that V bottom. These are not my favorite because ideally I'd like to go in and trap down here and back up again. But again, we're overall bullish. It should not surprise anybody if we make a strong run down tomorrow, a pop right back up, because there are so many buyers down here. We may not get the chance to get a bear trap down there. It may not happen. If that happens, it'll almost always pop up and begin to grind. Now, I mentioned earlier, what's the key to this? The key to this is the separation away from the moving average. The grinding move will not pull back. If it does pull back, it'll barely touch that 21 EMA. When that grind happens, you know those are sellers getting the heck out of the way. That gives the buyers now a great chance to buy the dip. The hardest part about these V bottom reversals like this is you cannot chase this thing going higher because, well, what happens is the reason why this price goes higher is because sellers are getting out of their positions. Eventually, buyers are going to want to come back in and they're going to want to buy as low as they can. Knowing that, mark that trend line. Find that channel. Remember, look left. The best entries I know of are off the first test, off that low, and just below one of those prior swings there, right? And again, this could be a bear trap below a prior swing. It could be a failure, right? Bears come in, get short off that 21 EMA. That's where failures live. Failures into pullbacks, failures into bear trap combinations. And remember, you better leave that runner if we get something like this, because this could easily squeeze, because the amount below the range, the amount above the range, we call these pendulum swings. You'll learn more about that, of course, inside the free video course. Now, this pattern, this V bottom reversal, oftentimes happens with that bear trap, that technical bear trap here, that double bottom, right? And then because everybody wants that double bottom off that low, it boing off that low, right? It V bottoms off that low, grinds. This is very, very common after a double bottom, right? Get that technical bear trap right there, higher high, trap low. Take your profit at that 1-to-1, move that stop up to point of entry. You guys will learn this trade management stuff inside that free video course, by the way. And again, hopefully it keeps on going, right? Hopefully it rewards us with a big run higher. But again, we're pretty bearish here in the short term right now. So don't be surprised. It pops up, retest that low, and then we get that big home run move going higher. Those V bottom reversals are very common after a double bottom retest like that. All right, guys? Now the game plan is all set for tomorrow. That's the game plan. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, come trade this stuff with us. Guys, the markets are wild right now. I know things are confusing, but don't you worry. The easiest way to start making consistent money in these markets is to learn and trade along every morning in our trade room. I'm going to put all the important links tonight, description of the video, put the free class links down there. Start there first. Learn the basic strategy. Start making money on your own. Again, our trade room membership links, the Twitter X feeds down there, everything you need there, description of that YouTube video. All right, guys? Hope you learned a bunch here tonight. Hope you use this knowledge to make a killing tomorrow on PPI Friday. And hopefully I'll see you sometime soon. Find lots of winning trades with us every morning in the morning trade room as a member. In the meantime, be well, be nice to each other out there. And as always, be here next time. Adios, amigos. Bye for now.